Okay, so I want to do the example under IAS.8, which is correction of errors. So I will also going to do application of deferred tax under this topic. So mostly what happened on this standard of International Accounting Standard number 8, we're going to be given the scenario which there is a problem of error that has happened is either on the current year or on the previous year or both. So usually you are going to be given the scenario which there is an error that happened on the current year and on the previous year at the same time. So you must be able to identify and separate them. Why? Because the error that happened on the previous year must be adjusted on the retaining earnings. Then the error that happened on the current year still can be readjusted on the profit or loss. Why? Because remember the principle of matching concept stated that item can be only recorded on income statement if it's for the current year. Okay, so on the required part, we have to provide all relevant journals entry to be proceed in the financial statement of JJ Limited for the reporting period ended 31 December 2020, which means that our financial report started on 1 January 2020. Okay, then let's look at the scenario. Then we start with our workings. On 15 June 2019, JJ Limited bought a plant with the cost price of 900,000. A plant has 10 years useful life and uses straight line basis with a residual value of 50,000. Then the machine were available and brought into use on 1 July 2019. Then on 31 August, accountant discovered that the residual value were not accounted for when calculating depreciation since the day of purchase. So in this case, what happened is that there is an error that happened since the day of purchase. So which means that in this case, we're gonna have two different errors. The one that happened in the current year and the one that happened in the previous years. So which means that we have to record them separate in order to comply with the principle of concept, of matching concept. Okay, so before you start with your journals, you must first show the calculation. How did you get the amount of correction? Okay, so firstly, remember we're gonna have two parts. We're gonna have the first part of incorrect calculation. Okay, then after that we're gonna also have part of correct calculation. After that we compare these two amount of incorrect and correct. Then we do what? We make a correction. If we subtracted more, which means that we have to deduct. If we subtracted less instead of more, which means that we are going to do what? To add. So your journal will not always be the same. Sometimes you can debit a depreciation, sometimes you can credit a depreciation. It depends on the error. Okay, so let's start. Incorrect calculation. When they calculate depreciation, they were not including what? A residual value. Okay, let's show the incorrect. What they did, they said is 900,000. They didn't subtract 50,000 of residual value. That's the error that they did. Then they divide by 10. Remember, we have to separate for the previous year and for the current year. Now let's start with for the previous year. On the previous year, it was brought into use on 1 July 2019, which means that it's from 1 July to December 2019 for the previous year. Okay, we're going to say multiply by 6 over 12. Okay, so we're going to have 900,000 divided by 10, then multiply by 6 over 12, which is going to give us 45,000. So the depreciation that they calculate in the previous year for 2019 is 45,000. Then before we go to correct, let's also calculate for the current year. So for the current year is 900,000 divided by 10 multiplied by 6 over sorry, it's gonna be only divided by 10. Why? Because it's 12 over 12, which means that for the current year they calculated incorrect calculation of 90,000. Okay, this one is for 2020. Okay, remember we can't rectify something which we don't know what was supposed to be done, which means that firstly we have to show a correct calculation. A correct calculation. What was supposed to be done? Okay. Okay, I just want them to be on the same side. Okay, then on the correct calculation, what's supposed to be done? They were supposed to say 900,000 minus 50,000 of residual value. Okay, then they divide by, for the last year, it's gonna be 10 multiplied by 6 over 12. Okay, then let's calculate. It's gonna be, the depreciable amount is gonna be 850 divided by 10 years divided by, multiply by 6 over 12, then it's gonna give us 42 500 for 2019. Okay, now let's go to 2020. What was supposed to be done in 2020 under the correct amount? They were supposed to say 950 minus 50,000, which is going to give us depreciable amount of 850,000 divided by 10. Okay, which is going to give us 850,000 divided by, you also have to calculate on your side, it's going to give us 85,000 for 2020. Okay, so if you can check these two depreciation, they are not the same, which means that there is a error. Now let's first determine the error of the difference for previous year, the one which is going to be calculated under retained earnings. Okay, we're gonna compare a 45,000 minus 42,500. Please make sure that you understand. After, remember, whenever amount that you are going to get, when you subtract them, you're still gonna get the different, but you have to understand what are you going to do when you prepare the journal. Okay, let's first calculate, then we're gonna analyze that. It's gonna be 2,500. Okay, let me highlight this part. Okay, now let's go to the current year. which we are going to use the depreciation, which will go to income statement. Okay, in this case, it's gonna be 90,000 minus 85,000. Okay, then the different will be a 5,000. Okay, now we have to prepare the journal entry for these two amounts. So if you can check this calculation, it has a lot of marks than the journal. Okay, let's start with the first journal. What are we going to debit? What are we going to credit? This is how you should analyze this question. So you have to say they calculated 45,000 instead of 42,000. In other words, they subtracted more depreciation instead of less depreciation, which means that what we have to do is to reverse. We have to reverse because they incorrectly calculated more instead of less, which means that the different we have to do what? To reverse it. How do you reverse depreciation? Remember, you know the normal depreciation journal, which is we debit depreciation and credit accumulated. So when you reverse, you do a versa versa. Okay, so the first part, remember, is for the last year, which means that instead of using the word depreciation, you are going to use the word retaining earnings. Okay, which means that we are going to debit accumulated because we are reversing accumulated depreciation of amount of 2,500. Then you credit retain earnings. Why? Because it's for the last year. 2,500. Okay. So before we go to the second one for the current year, we have to account for deferred tax. Remember, deferred tax, if we have income, we're gonna have a deferred tax of expense. If we have a normal transaction of expense, we're gonna have deferred tax income. In other words, if SARS, if you receive something, you have to give SARS, which is an expense. But if you expense, for you, it's an income to SARS because you are going to do what? You are going to claim. Okay, so this is how you should analyze deferred tax. Very simple. So in this case, if you check, this is the opposite of depreciation, and you know that if we incur depreciation, is an expense, which means that we're gonna have what? Deferred tax income. So in this case, it's opposite of expense. Why? Because we do what? A versa versa, which means that if it's the opposite of expense, it's look like it's an income, which means that the deferred tax that we are going to have is going to be deferred tax expense. Deferred tax expense, we have to say debit deferred tax of P&L is the same one with liability. Is the liability one, because when you debit P&L, it's increasing the expense. Then you credit defer tax SFP. I explained this principle on the previous video for deferred tax. So 2,500 multiplied by 28% is going to give you 700 and 700. Okay, then the next one, we calculated the incorrect amount of 90,000 instead of 85, which means that we subtracted more depreciation, which means that we have to reverse. We are going to say depreciation accumulated, we are reversing depreciation amount of 5,000 and we credit. In this case, we're going to credit depreciation because it's for the current year. We can still be able to record it under income statement. So this is how you should analyze the first scenario. Okay, so we're going to have also a deferred tax, which is going to be the same with the previous one because the journal is look like income. We're going to have deferred tax P and L. Okay, then 5,000 multiplied by 28% is 1,400. Okay, so this is how you should do this question. The last deferred tax is SFP. So let's look at the other scenario that I have with the different view of the previous one. So they said on 1 January 2020, Gen Ltd purchased the machine with the purchase price of 550,000, VAT exclusive. Installation cost paid was 70,000, VAT exclusive. Then a machine has a useful life of 10 years using straight line basis with nil residual value. Then on 31 December, it was discovered that machine was recorded without installation price since the day of purchase. So in this case, we have two mistakes. The first mistake, they recorded the machine without what? Installation price. Remember, installation price form part of cost price. So they recorded only 550 of purchase price, which means that the effect that is going to happen is to adjust the purchase price and to readjust the depreciation. Okay, let's first show the calculation. They recorded, okay, incorrect. They recorded the cost of 550,000. Okay, then under correct, they were supposed to record the cost of 550 plus 70,000, which is going to give us 620. Correct, they were supposed to record the cost of 620. So for these two information, we can record the journal entries. Okay, the journal that we are going to record, which means that they recorded less price of the cost price instead of more, which means that we have to do what? To increase. We have to increase by saying debit installation cost. Remember, and credit, remember it happened on the previous year, which means that we must have retained earnings. Okay, then the different is 70,000. 70,000. This is what they were supposed to do when you rectify the error. So let's proceed quickly in order to make this video short. So the second part is the issue of depreciation. On the issue of depreciation, under incorrect, they use 550 to depreciate. They say 550. Remember, we are doing for the year 2022, and we are on the current year. We are on the current year 2022, and it has been purchased on 1 January 2020. Okay, So the useful life was 10 years. Then our depreciation, which means that is gonna be, let me calculate, 550,000 divided by 10 is going to be 55,000. We are first doing on the previous year, which means that it's 2020 and 2021, which means that even 2020, 2021 is going to be the same, which means that let's just multiply this by 2. Then it's going to give us 110 for the previous year. 110,000. Okay, so under correct, they use 620,000 divided by 10. Okay, which is going to give us 62,000, which also we can multiply by 2 and get for previous 2 years. Okay, 62 multiplied by 2 is 124,000. Okay, then now we can go to the current year. On the current year, it's going to be 550,000 divided by 10. In this case, we don't calculate any months. 55,000. Okay, in this case, it's going to be 620 divided by 10. Okay, which is going to give us 62,000. Okay, so now we have to do the journals using this information. First, remember, we are saying we are going to do a deferred tax as well. This journal is look like income, which means that we're gonna have deferred tax of expense, P and L. Okay, then you credit deferred tax of SFP. Okay, you're just gonna do a 28% of 70,000, then you will get the answer. Okay, then after that, now we have to readjust the error of depreciation. Let's start with the previous year. So we have to get the difference between 110 and 124. If you say 124 minus 110, you're gonna get 14,000. On the previous year, error was 14,000. So in this case, they subtracted less depreciation instead of more, because the correct one is more, which means that now we have to do what? In order to correct, we have to add more depreciation. Okay, which means that in this case, we're gonna say retaining earnings this side and credit accumulated depreciation 14,000. 14,000. So now we have to do the journal for deferred tax, which means that because this journal is an expense journal, which means that our deferred tax will be income. We're gonna say deferred tax of SFP and deferred tax of P and L. So you're gonna do 28% of 14,000. Okay, then the next one, we have to compare 55,000 and 62,000. So it's the same case. we subtracted more depreciation. We're supposed to subtract more depreciation, but we subtracted less the incorrect one that we did. So, which means that the difference between 62,000 minus 55,000, it will give us 7,000. Now, because it's for the current year, we don't use the words retaining, but we're going to use depreciation, 7,000, then accumulated depreciation of 7,000. So this is an expense, which means that our deferred tax is going to be deferred tax assets. Is going to be deferred tax assets, because if we expense something, we have to claim from SARS, and when we claim, it's gonna be an asset. Okay, so that's what you have to do, and you punch 28% of 7,000. So this is how you have to do it. Very simple. Okay, so now we are going to do the next question. Okay, then on the next scenario, okay, then they said on 30 June 2019, JJ Limited brought a plant with the cost price of 750,000. A machine were required to dismantle and remove the cost at the end of useful life at the cost of 250. Discounted rate is 10% annually. A plant is 10 years useful life. Uses straight line basis to new residual value. A machine were available and brought into use on the same day. Then on 31 December 2019, accountant of JJ Limited discovered that appropriate discount rate were 15% since purchase of plant. So in this case, there was an error when they calculate dismantling cost. They use the discounted rate of 10% instead of 15%, which means this affect our cost price, which if cost price has been affected, it will also affect the depreciation. Okay, so incorrect. They said the cost price of 750. Now they have to add what? A dismantling cost, which means that in this case you have to use the financial calculator. Let's go to financial calculator. Then they said a future value. We are looking for the present value. Then they said the future value is an amount of 250,000. You have to calculate on your side. Then the PMT is 0. Then the interest, they use a 10%. We're starting by incorrect one. Then the period is for useful life of 10 years. Okay, then the discounted present value is 96. $38.5. Okay, the rounding is not necessary for this lesson. Okay, then they were supposed to use the cost price of this amount, 75,750 plus 96,000. Okay, then the correct one, let's go to the correct side. The correct one, they were supposed to say 750,000 plus the present value, which we have to use now, 15% on interest. Let's replace 10 by 15%, which is going to give us 61 7 6 7 9 6. Okay, so this is how you are going to do it. So let's take the cost price that were recorded in full. Okay, go back to normal calculator. 750,000 plus 96, 3850. They were supposed to, your incorrect one, they did 9, your 8, 4, 6, 30, 8, 5. Okay. Then the correct one that they were supposed to do, 9, 750. 750 multiplied by plus 61796, which is 811796. Okay, then now we have to get the difference between these two amounts. They recorded more cost instead of less cost, which means that we're gonna say 846,385 minus 811796. The difference is 34,589. Okay, which means that we have to do the journal for this one. Because they recorded more instead of less, we have to do what? To reverse, which means that retain earnings this side, and we credit. Is it machine or plant? Okay, plant. We have the plant must be reduced because they recorded more instead of less cost. Okay, 34,589. 34,589. Okay. Then the other thing, remember, every time when we calculate a present value, we have to do what? The interest, which means that the interest were also affected by this present value. They said 96,385 multiplied by incorrect one, they use 10% for interest, and they get 9,638. Okay, then the correct one, they were supposed to say 96,385. Sorry, they were supposed to say 61,796 multiplied by 15%. Okay, 61,796 multiplied by 15 over 100, which is going to give us 9,269. Okay, now let's take what is the difference between 9,269 minus 9638. The difference is amount of 369. Okay, they recorded more interest instead of less interest, which means that now we have to do what? To reverse. In this case, we have to reverse. Remember, expense normally is debited. So when we reverse, we have to credit, which means that we're gonna say a retaining earnings because it's for the previous year. Okay, sorry. When we reverse a dismantling cost, liability must decrease. Okay, by amount of 369, and credit Remember, we were supposed to use the words interest expense, but because it's for the previous year, we have to use retained earnings. 369. Okay. Then now, from there, what you have to do is to use the same procedure that we were doing on the previous question, which you have to calculate the depreciation this side using the cost of 8,046 and calculate the correct depreciation of using 811. Then you compare them. Then you as well do a deferred tax. So that's what you have to expect under IAS.8. So I hope you learned something. Unfortunately, I can't be able to proceed as the video. If it become long, I won't be able to upload it. So see you next time.